Hey everyone, JPA Trades here with another video. This video we're going to be going over the VIX. I know a lot of you guys kind of see me talking about it on Twitter saying, hey, the VIX is really high right now, might not want to trade anything, might want to wait and see how things are going to go down. So saw your comments, saw your requests, so thought I'd put this little instructional video together, give you a brief overview, a lot better than just a couple of tweets about it, kind of give you something to reference. And then as always, before we get started, just wanted to say thank you to everyone for showing up, coming out to support, all the likes on YouTube, all the new subscribers. It means the world to me that you care and kind of support me on these different platforms. Same with Twitter. Twitter, we've been growing like crazy, huge engagement, huge everything. So just thank you so much for all that. So let's get into it. So what is the VIX? So the VIX stands for the CBOE Volatility Index, or VIX, is a real-time market index representing the market's expectations for volatility over the coming 30 days. Investors use the VIX to measure the level of risk, fear, or stress in the market when making investment decisions. Traders can also use the VIX using a variety of options in exchange-traded products or use VIX values to price derivatives. So basically what they're saying here is the VIX is the volatility. So if the VIX is high, there's not a lot of stress or fear. I mean, there is a lot of stress or fear on the market with a high VIX. With a low VIX, the market's kind of a bull trend. Everyone's all happy. Everything's good. Not too much to worry about. So high VIX, fear, downtrend, bearish thoughts. Low VIX, blue skies. Everything's good. Bullish market. So the VIX affects options, premiums, and prices. So the volatility is one of the primary factors that affects a stock and its index options prices and premiums. As the VIX is the most widely watched measure of a broad market volatility, it has substantial impact on option prices or premiums. A higher VIX means higher prices for options, i.e. more expensive option premiums, while lower VIX means lower prices or lower option premiums. So you'll see me say this a lot on Twitter, where I say, hey, these options look pretty expensive right now. You might want to wait off, or hey, these options are cheap. You might want to go and look in. So the VIX plays a really important part in that. If you see that a contract is trading at 2 or 3 times what the current value that you're used to it, it's probably because the VIX is spiking. And how you determine if they're cheap or expensive, that comes from what I always say is you want to really focus on just a few key names of stocks. So if, let's say, just for example, Microsoft. You huge gamer, you love Microsoft, you love the stock Microsoft, you're really into it. So you know a $5 out of the money Microsoft collar put should cost $1, let's just say, for example. So if you see that on just any given day those contracts cost $3, you're gonna say, what's going on here? What's up? Something's wrong. So you might not be the best idea for you to buy those calls or puts that day because the VIX is so high. And if it's going to chop around, which is what it's been doing a lot lately with the volatility in the market, you're not really going to be able to get those huge returns because you're paying so much premium because everyone's already afraid and expecting that. And the same thing, if the VIX is lower, you want to go and take advantage of that. That's when you want to start looking at your leaps, your swings. So with that being said, I'm going to open up the VIX on my Thinkorswim here just to kind of show you guys. So here's the VIX. So here's right here, switching over the month in January where everything goes crazy. VIX is up at 38. So you notice right around then, that's when the S&P 500 sold off. It went from 480 to 420. And then now we're chopping all around everywhere. Everything's just kind of really a mess, really. You got to really pick your entries right to get those profits, or else you're going to get chopped away and lose your money throughout the day. If you look back in December when we were still in that bullish trend, the VIX is down in the low teens. And this is where you really have those cheap contract prices. This is where you can really take advantage. So I'm just going to give you an example here. So I'm just going to go across the year. So here, even during the worst last year, during that good bull run, VIX never really got, right here, it made it up to 30 in March, but most of the year it really never got up to these high 38 levels. So here's this VIX trading mostly under 20. And you used to say, oh, VIX is over 20. You don't want to be trading options right now. And that was because we're in a bullish market. You want to have that low premium so you can really observe those moves. But now that we're in a bearish market, you kind of just have to live with what the price of the VIX is and stick to shorter time frames. You don't necessarily want to be buying your big long swings. Like I see people buying stuff already positioning for leaps in June or next year, and while they might work, you're really overpaying for it right now because of that VIX. So like say for example you were looking in June here of last year, VIX is around 14 at a low. Let's just go look at SPY over that same year. So here's SPY in that June. So right around 426. Now if you wanted to go and take your big leap out, you could have bought your SPY even a few months away. Let's say you buy 450s that are all the way out of the money, but they go into the money for 453. They might have cost you 25 cents to buy them, but at the end of it, you weren't getting chopped away by the time and the premium that was in them. You were able to just ride it out. But now you'll notice that contracts just almost seem like they evaporate throughout the day, and that just comes down to the VIX being so high. Like the VIX is incredibly volatile right now. You want to be patient with it and keep it on your scale. So here you know that our high of the VIX so far during this sell-off is 39, just say. So if you start seeing VIX get above those levels, you can use it as an indication that SPY is probably going to break the 420 low. So just go back to SPY. So that 421 corresponds pretty much with our VIX. So if you start seeing VIX start creeping up to that 39, looking like it might break through 40, you can also use it as an indicator to say, hey, it might be time for me to do something with SPY here. We might break down further and just gets worse and worse. For really to think that we're back in a bull market in a really safe spot where you can just kind of buy calls with a lot of duration to think it can go, I'd really prefer to see VIX back under 20. So kind of use that as a good indication, and I didn't put that in the little PowerPoint presentation there because I want you guys to kind of listen and understand what's going on here. Is when the VIX is high, we're in a bearish market. When the VIX is low, we're in a bullish market. So VIX up over 20, think that it's not necessarily the best time to hold calls. VIX under 20, that's where you can start thinking about clear blue skies again. So keep that in mind. Focus on just your core names. Pick 5 stocks that you can do really, really well. 5 stocks that you think you know better than anybody else. Think, hey, I know everything about these 5 stocks. If you ask me a question about how it's going to react, I can tell you because these are my 5 stocks. I know how they work. And then watch and see yourself improve. You'll see that, oh, the price of these is high. I got to wait a few days, just avoid it. You saw this week on Twitter, I didn't trade on Tuesday or Wednesday because the prices were too high. There was too many unknowns. The VIX was crazy. It just wasn't worth it. And then today we had Lowe's puts work really well. They went 1 to 3.1, so huge gain. Just had to be patient, had to wait. And that was just from understanding the market, understanding the VIX, understanding the unknowns, and really just being patient, taking my time, and finding those opportunities when they present themselves. So with that being said, I hope everyone had a great week. I hope I shed a little light on you here for the VIX. If you enjoyed it, leave a like, and I'll see you out there tomorrow.